Are you ready to navigate the complex world of GST registration and supply classification in India? In this comprehensive guide, we'll unravel the requirements for businesses in a clear and concise manner. From understanding the nuances of GST registration to correctly classifying your supplies, we've got you covered. Let's dive in and demystify these crucial aspects of taxation for Indian businesses. Welcome to Chapter 1, Understanding GST Registration. Did you know that GST registration becomes mandatory for businesses upon exceeding specific turnover thresholds? Knowing when and how to register is essential for compliance and operational smoothness. Let's delve into the key thresholds, exemptions, and the registration process. Crossing these thresholds can be a pivotal moment for a business, as it signifies a transition to a new level of regulatory responsibility. Understanding these nuances is critical for navigating the complexities of GST compliance. What is GST registration? It's the key to unlocking your business's compliance and growth. Obtain your unique GSTIN to collect taxes, claim credits, file returns, and trade across borders legally. This 15-digit code is your passport to the world of GST. Stay ahead, stay compliant, stay competitive. Navigating registration thresholds is crucial for businesses in India. In regular states, it's 40 Indian rupees lakhs for goods and 20 Indian rupees lakhs for services. Special category states have lower thresholds, 20 Indian rupees lakhs for goods and 10 Indian rupees lakhs for services. E-commerce operators, however, face no threshold. Registration is mandatory, regardless of turnover. This rule applies to all online sales platforms. Understanding these distinctions is key to compliance and operational success in the Indian market. Wondering if your business needs GST registration? Let's simplify it with a quick decision flowchart. First up, check your turnover against the threshold. If it exceeds, move on to calculate your total turnover and determine your state category, regular or special. Next, consider your supply type, goods or services. This flowchart streamlines the process, guiding you through the key factors of turnover, location, and business type. Stay tuned for a clear path to understanding your GST registration obligations. In the complex web of GST regulations, this flowchart serves as your navigational tool, helping you swiftly ascertain your registration requirements. Ever wondered who must register for taxation, no matter their turnover? Interstate suppliers, casual taxable persons, reverse charge recipients, input service distributors, and e-commerce aggregators fall into this category. From businesses making interstate supplies to those facilitating connections like Swiggy and Zomato, registration is a must. So, whether it's distributing tax credit or operating without a fixed place, these entities are in the taxation spotlight. In the world of commerce, understanding the Harmonized System of Nomenclature, HSN, and Services Accounting Code, SAC, is paramount. These standardized classification systems globally categorize goods and services, playing a crucial role in accurate GST filing and invoice generation. Think of them as the universal language of trade, ensuring precision and consistency in transactions. Without these codes, the financial landscape would be chaotic, lacking the clarity needed for smooth operations. Mastering HSN and SAC codes is not just a choice, it's a necessity for businesses navigating the complexities of modern trade. What is HSN? It's the Harmonized System of Nomenclature, a global classification system for goods. Think of it as a detailed code that breaks down items into categories. The first two digits represent the broad chapter, the next two the subcategory, followed by the detailed subheading, and ending with the India-specific tariff item. This system, developed by the World Customs Organization, is extended to 8 digits in India for precise classification. In essence, HSN codes provide a structured way to categorize products for international trade. Ever wondered how goods are categorized for taxation under the HSN code? Let's dive into some examples. From the staple of rice at 5% to the sophistication of mobile phones at 18%, each item carries its own GST rate. Men's suits stand at 12%, while medicaments and pharmaceutical products are also at 12%. The luxury of motor vehicles sees a 28% tax rate, contrasting with the 18% for television sets and monitors. Each code tells a story of taxation tailored to the product. From the essentials to the extravagant, the HSN code paints a vivid picture of tax rates across various goods. Ever wondered about the mysterious SAC codes in GST? SAC, or Services Accounting Code, is the key to categorizing services for tax purposes. Much like HSN codes for goods, SAC codes are structured with a purpose, 6 digits that reveal the service category, group, and specific type. Think of it as a roadmap guiding each service to its tax destination. From major categories to specific services, each code plays a crucial role in the GST landscape. Understanding SAC codes is like deciphering a secret language that unlocks the world of service transactions. Ever wondered how GST rates apply to common services? Let's dive in. Accounting, auditing, and bookkeeping services fall under SAC code 995411, taxed at 18%. Legal consultancy and representation services? SAC code 998212, also at 18%. Now, here's a pleasant surprise: restaurant and food serving services, under SAC code 996331, enjoy a lower 5% GST rate. Lastly, construction and maintenance services, SAC code 995421, are taxed at 18%. From financial to legal to culinary services, each category carries its own GST rate. Remember, understanding these codes can help navigate the tax landscape more effectively. Ever wondered about the difference between HSN and SAC codes? It's all about what they classify. HSN codes are for tangible goods, think rice, mobile phones, and cars. They're based on physical characteristics and follow an 8-digit system in India, aligning globally. On the other hand, SAC codes are for intangible services like consulting, catering, and repairs, classified based on the nature of the service with a 6-digit system specific to India. So while HSN focuses on goods, SAC zeroes in on services. 2 systems, each with its own unique purpose. Are you wondering when to use which code, HSN or SAC? The decision is simple: for consulting, repair, or transport services, go with the HSN code. If you're dealing with tangible goods like furniture, electronics, or food, classify them under the HSN code. It all boils down to what you're supplying, goods or services. Some businesses may require both codes if they offer a mix of products and services. Remember, the key factor is the nature of your supply. So, choose wisely based on whether it's goods or services you're providing. In the complex web of GST regulations, Chapter 3 unveils a crucial puzzle piece: the place of supply. This key factor delineates the boundary between intrastate and interstate transactions, dictating the application of specific GST components. Intriguingly, the classification determines whether CGST plus SGST or IGST rules the realm. Picture it as the geographical compass guiding tax implications across state lines. Clear comprehension of the place of supply is the cornerstone in navigating the intricate landscape of GST compliance. Ever wonder how the location of goods impacts their supply? When goods are on the move, their place of supply is where the journey ends, ready for delivery. But what about goods that stay put, like immovable property? In that case, the place of supply is where they are located at delivery. And when assembly or installation is needed, the place of supply shifts to where that work is done. Plus, for goods on board vessels or aircraft, the place of supply is traced back to the first point of departure. Remember, where goods are matters in the world of supply. Ever wondered how the location of a sale affects taxes? In Scenario 1, a Mumbai furniture maker sells a sofa to a customer in Pune, both in Maharashtra. The place of supply is Maharashtra, with CGST and SGST applied, as both are in the same state. Now, in Scenario 2, a Delhi wholesaler ships electronics to a Jaipur retailer in Rajasthan. Here, the place of supply is Rajasthan, with IGST in play due to the interstate nature of the transaction. Whether within a state or across borders, understanding place of supply is crucial for tax implications. Ever wondered how the location of a recipient affects the place of supply for services? When it comes to services provided to registered persons, it's based on their GST registration address. For instance, a consultant in Bangalore serving a client in Chennai means the place of supply is Chennai. On the flip side, services to unregistered persons are determined by where the services are performed or the recipient's address on record. Think of a Mumbai plumber fixing a home in Mumbai, the place of supply is Mumbai. When it comes to restaurant and hotel services, it's simple, the place of supply is where the services are physically given. Picture dining in a Goa restaurant, the place of supply is Goa, regardless of the customer's home state. So, whether it's consulting, plumbing, or dining out, understanding the place of supply is key to navigating GST regulations seamlessly. Ever wondered how the state borders impact taxes? When it comes to interstate versus interstate supplies, the difference is significant. In interstate supplies, both the supplier and recipient operate within the same state, leading to a dual GST component of CGST and SGST. On the other hand, interstate supplies involve parties from different states, resulting in a single IGST component. The revenue distribution also varies, with interstate taxes split between the center and state, while interstate taxes are collected by the center and later distributed. This contrast is reflected in the invoice format as well, where interstate transactions show CGST and SGST separately, whereas interstate transactions display IGST alone. The implications of these distinctions are substantial for businesses navigating the complex terrain of taxation. With GST registration thresholds differing for goods and services, it's crucial to stay informed. Always use the correct HSN and SAC codes to ensure accurate compliance. Understanding place of supply rules is key to determining the applicable taxes. Remember, compliance is key to smooth sailing in the GST landscape. Are you ready to put your knowledge into action? You've built a strong foundation in GST compliance essentials like registration requirements, supply classification, and place of supply determination. Now, it's time to apply what you've learned. Practice identifying HSN/SAC codes, navigate place of supply scenarios, and review registration procedures on the GST portal. Remember, accurate classification and understanding of place of supply are crucial for correct tax calculations and avoiding penalties. When unsure, consult the official GST portal or seek professional guidance. Your grasp of these concepts is key to smooth compliance and maximizing benefits.